Samsung is up for you. That one is doing pretty well. It's around 0.4% higher.
KYC wallet customers can make payments, on Paytm Payment Bank.
We understand from our sources is that Warburg Pincus is looking to sell almost 2.5% stake in the company.
The cautious note coming in from Kotak Institutional Equities on Hero MotoCorp. Now the first tick is in the green, so 40 points higher on the Nifty.
The slowdown is for real. And from whatever we are picking up, it looks like it's going to come back into 4 quarters.
But now with the amendment, this tax rate will become 30%.
On the Fed side, I do not believe that Fed can stop hiking.
Although segmental limits have been removed and a headline limit has been given.
India has underperformed. So YTD, it's actually one of the weakest equities markets in emerging markets universe.
A new fiber plan which starts at 198 rupees per month.
The mid-cap side of things, which too are not looking so good.
Welcome to the last hour of trade. This is Closing Bell, and we are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. Rima Surabhi with me here in the studios. Nigel joining us on the newsroom floor as always. This is turning out to be, in a way, the opposite of what we had last week. I mean, yesterday was similar and today is similar as well. And what I mean by similar is a very lethargic price action. I mean, not like the absolutely frenetic pace of price action that we had all of last week. This is slow, almost slow burn. The swings are coming, I mean, especially on the Nifty and the big indices, but generally speaking, not very much. It's been lethargic price action, no doubt, since the word go. Market breadth is deeply negative. This is after starting higher. I mean, advances outnumbered declines, but that turned very quickly within the first half an hour, and now it's 3:1. Adani Group stocks, which I've always said, very important from a retail sentiment point of view. It kind of shows you where that sentiment meter is, and that entire pack is taking a big knock. We'll talk more about Adani Group and what may be the dominating driver here with Vivek in just a bit. Metals are the other sectors which are taking a knock. Public sector banks are taking a knock, and small caps are, of course, under pressure as well. Private banks led by names like IndusInd, etc., are doing a little better. European markets are higher, so I mean, I don't think it's a global issue. The Euro Stocks 50, a group of 50 largest European stocks, that's up about 0.4% or so. Rima.
Prashant, Rima, I just wanted to say, Prashant, you use the term slow burn. I thought you might say slow death. Burn sounds better. We'll take burn. Rima.
All right. For now, it's 16,948 on the Nifty. Just about half an hour back, the Nifty had actually breached and went closer to 16,900. In the process, it's taken out yesterday's intraday low. Yesterday, the Nifty intraday low was 16,918, and today, in that wobble that we saw, the decline and the recovery in the last 15 minutes, that intraday low was taken out. But again, as you can see, there has been a bit of a recovery. The Nifty Bank, at least, is holding up in the green so far, so it's got a green tick going for itself. Look at the way crude prices have rebounded, right? We're talking about the buy skew on the global markets, whether it's the Asian markets or Europe right now. But Brent crude is now at $78 per barrel, and this compares with a recent low of almost $65 per barrel. So there has been a significant pickup in crude prices. A couple of the other names that stand out on the way down for our own markets. Tech Mahindra is down nearly 3%. Hero MotoCorp, after that cautious note from Kotak Institutional Equities, where they are worried about Honda's entry into the 100cc motorbike segment. Bharti Airtel showing signs of nervousness as Reliance Jio is now targeting the home broadband space. So Bharti Airtel has seen a crack of close to about 1.5%, and other auto names like Tata Motors, Eicher Motors also in reverse gear today, Surabhi.
Well, absolutely. It's not been easy going, and no matter the green that one can wear, it's really not helping the screen much, is it? Just want to mention that European markets, while of course it did start out positive, some of them are also now losing their early opening momentum, kind of grinding into the slow patch even as we speak. Though, of course, there's still a gain on most of those indices. On the mid-cap screen, I mean, this mid-cap underperformance that we've been speaking about, the small-cap index, by the way, is down 5% this month. Nifty is down only 2%, so that divergence continues. Just want to point out a couple of stocks to sort of express the kind of selling that's going on. Look at Bandhan Bank, look at Nykaa, and these are stocks where the selling is on decent volume as well. It's cutting across sectoral lines. There is Shipping Corporation of India. There's IEX, which is down about 4-5%. Nykaa is really grinding lower. It was down 2.5% yesterday, another 4% today. And that's a deep cut on a PSU name as well. Just want to pull up the intraday graph also of a Dilip Buildcon, and that perhaps explains the mood of the market. Dilip started the day with very optimistic and positive news. They have been shortlisted as L1 bidders in a particular highway project. The stock was doing very well in the morning, but you can see the gains are coming off, and sell every bounce seems to be the mantra that's playing out for the market and for a lot of stocks as well this afternoon, Nigel.
Well, that's right. The Nifty is unable to sustain at higher levels, and that's a bit of a problem. The last couple of days we are waking up to positive cues, and then it's a perfect shorting opportunity for the bears. Now, I'd like to see if we have to start off on a bit of a negative note, then let's see how the markets react. But otherwise, it's clear, it's on a day-to-day basis, the bears are just coming in there, they're shorting the index and they're making some money. Pure textbook stuff. Now, the 16,900 put, which will expire tomorrow, that's very, very active today. The premium out there is close to around 50 rupees odd. So the important point is that 16,820 to around 16,850. Positioning is such that that level holds out. If we break that level and we trade below that level decisively, well, we'll see a very, very sharp downtick in tomorrow's trading session, which is expiry day. And in March 2023, we've been fascinated about the Nifty moving 50, 100 points up or down. Well, the Nifty is down close to 2%. But the mid-cap and the small-cap indices, they have taken a harder knock, and the small-cap index is down nearly around 5.5%. So the broader markets, there's intense pain, there's lack of appetite as well. You speak to a lot of trading desks, a lot of dealing rooms as well, and that's the kind of feedback you've been getting. Now, tomorrow onwards, we'll have a new fiscal year that we'll be looking up to. So let's see whether or not there'll be some revival in sentiment. But otherwise, it's been a brutal last few days, particularly for the broader markets.
Well put, Nigel. Thanks for that. Let's take our viewers then. What's lined up on closing bell today? Adani stocks fall. The group as a whole has erased nearly 50,000 crore of market capitalization in today's session so far. What's ailing the stock? A quick analysis coming your way.
Gas stocks are in focus as prices are expected to be revised from the 1st of April. We'll bring you the math in the next few minutes.
Innocent Bank is a big Nifty gainer today. What are brokerages saying about the stock? Details coming up.
We're tracking technicals today with Jay Bala. He's retaining a bearish view on the market. Get chatting with him in the next few minutes. Also, our alpha manager of the day is Ajay Vora from Nuvama Asset Management. All this and more coming up over the next 1 hour.
Okay, Mitesh is with us to tell us how you should position yourself in the last hour. Mitesh, hi, good afternoon. Good to have you here. 50 points lower now. I think eventually that retest of 16,850, 16,800 looks inevitable. I mean, the way the market is going, at least so far, your sense and what are your trades?
So, good afternoon, Prashant. I think we have been having this kind of view that while the markets in the near term, which is the immediate term on the intraday charts, basically they have been sideways, choppy and range. The overall bias is more on the negative side, and there's a stronger chance of us breaking below the recent lows of 16,850, 800. So I think once that happens, 16,400, 450 becomes the next working target. And therefore, I think selling on rallies or at least having some big bearish exposure via put options is not a bad idea to have. That's what we've been doing for the last few days. And to it about 17,100, 150 zones, you can add more to your positions. And in case you're lucky enough to get 17,280, 300, then we can be aggressively short in the futures market with a 100-point kind of a stop. Having said that, I have one buy and one sell call right now. I have a buy on Manappuram. That's a stock, which I think is doing very well in this market. And it's in fact, we had buys on this stock earlier as well. Now I think it can be bought afresh. I would recommend a stop at about levels of 114 half year and a target of around 125 on the upside. And Granules is something which is broken from a sideways consolidation on the negative side, on the downside. So that's a sell with a stop just above levels of 278 for targets of around 255.
Thank you, Mitesh, for those technical trading ideas. The group in focus today is the Adani Group. Names like Adani Enterprises have cracked 7%. Adani Ports is grinding lower, 6.5% gone on that. As a whole, the group has lost a market capitalization of 50,000 crore rupees just in today's session. CNBC-TV18 has access to a report by the Ken that says the Adani Group has not filed any update on the recent release of pledged shares. To understand more on the story, Vivek joins in. Vivek?
Well, that's right. So, most of the group companies have taken a significant knock in today's trading session. And, this is as per what the Ken is reporting. We had access to the news report written by the Ken. And what they are saying is that no regulatory filings by the Adani Group actually indicate that there has been a reduction in pledged shares post the various press releases that have been issued by the company and the group. Now, what the Ken is saying is that all of the disclosures made to the stock exchanges by the lenders should have been done within 2 working days of the actual pledge release and should have been made by the promoters within 7 working days. Also, what they are saying is that the lack of disclosures suggests that the debt has not been fully prepaid. Now, the other thing to watch out for, there were 3, press releases issued by the Adani Group. The first one was on February 6th. Now, on February 6th, the Adani Group said that the promoters were looking to prepay a little over $1,110 million ahead of maturity. And that particular move was said to release shares in the following group companies: Adani Ports, Adani Green, as well as Adani Transmission. Now, the Ken is saying that as per the disclosures, there has been a reduction in pledged shares only in Adani Ports and no reduction in pledged shares as far as the other 2 group companies are concerned. On March 7th, once again, there was a statement from the Adani Group, now where they said that there has been a prepayment of over $900 million. And they said that that particular move should have led to a release of shares in Adani Ports, Adani Enterprises, Adani Green, and Adani Transmission. However, what the Ken notes is that none of the pledged shares pertaining to this particular payment have been released by the banks. And lastly, March 12th, what the group was said, they said that they have completed a full prepayment of margin-linked share-backed financing aggregating to a little over $2 billion. Ken says none of the promoter groups pledged shares barring Adani Ports pledged shares have actually been released. We have gone ahead, we've reached out to the Adani Group, we've also reached out to the stock market exchanges, and we are awaiting a response from all of the above.
Oh yes, absolutely, Vivek. I think that will really provide some much needed clarity. Anyway, share pledges get updated quarterly. We'll have the data now. 31st of March is around the corner, so would be good to look at the actual hard numbers with the exchanges. Thank you for the details there. The entire group under pressure today. Well, let's welcome in our market expert. We have Mehraboon Irani joining in on this leg of the show. Mehraboon, good afternoon. Before we talk about the rest of the market and, the stocks to look at, anyway, it's a difficult market. Any thoughts on what Vivek was just sharing, this report by the Ken, which seems to suggest that the pledge levels aren't decreasing as much as what was indicated earlier, perhaps? I mean, this is, of course, Ken reporting. We're still waiting for the official numbers from the exchanges.
Well, this normally happens. I don't know how far it is true at this present moment, but even I read this report, should be. And today we have come to a stage, I think in the last 2 months, that any finger pointed at Adani and the market adds 2 plus 2 as 7 and not 5 or not 4. So that has definitely made a major dent today again in the market cap of the group companies. Independently, if you ask me, at the present level, Adani Ports looks to be a solid bet, if you ask me. But anything can happen. Anything can happen as far as stock prices goes, because the sentiment is so much negative towards them at the moment that despite the management coming out very clear and stating that over the next 2 years with our cash flow, we will take care of all the pledged shares problems. In this particular instance, since I have been in the broking industry, I was in the broking industry once upon a time, it's very normal that you pledge your shares worth, say, 150 rupees, you get a loan worth 100 rupees. Now, when your share value cracks and comes to 100 rupees, you are asked to pledge more shares or you are asked to repay. Now, over here, the management decided, possibly as per the disclosures they had made, that they have partly paid up. Now, the point is, why are the shares not pledged? The pledged shares not released? Because the value of those shares kept on falling. So, the report may be right that not many shares have been released. There have been no filings so far. Management has not come up with any clarification on this particular point. So, despite the fact that some money would have been paid off, or a large part also would have been paid off against the pledged shares have still not been released because the underlying value of the total shares pledged has possibly come down. So out of 100 rupees, even if I pay off 30 rupees, if my value has come down to 80 or 90 rupees, the shares are bound not to be released. So that possibly could have happened. What impact it has on the stock prices? Obviously, it dampens sentiment further. So nobody is trying to find out as to whether the shares are worth the present value or not. Now, if I were to buy the stock, who wants to touch it right now? That's the first thought which comes to the mind. So while there were takers of Adani ports at 700, 750, 800, there are more than 10 to 15 research reports available today online. I think at 570, 580, nobody wants to stick out the neck and say, well, this seems to be attractive. Because when there is a cloud of suspicion, I think the best thing which most people do is stay away from the stocks.
All right. Hi, Maribun. Good afternoon. Maribun, gold prices have been moving up. And from a stock market perspective, there are gold finance companies, whether it's banks, whether it's a couple of these financiers, Muthoot as well as Manappuram. Now, in today's session, Manappuram is holding strong with a gain of close to around 3.5%. Any view on this stock or CSB Bank? We put out a piece yesterday as well from the banking space. It has close to around 45% of its loan book is towards gold. View on any of these two stocks?
Let me first of all appreciate one thing, Nigel, which you had mentioned more than 2 years ago, that while the gold finance space looks interesting, the point is competition is hotting up. And I think I have to say it, that you are possibly one of the first persons to say it, and you got 100% right. I think gold finance may remain an interesting business, but there are many, many players who are coming to the market, and some banks who were playing a very passive role. I think they have also suddenly become very active. And this is not only the Catholic Syrian Bank, even other banks today have gone into gold loans. So while the market may remain robust, may remain good, may show its growth, there are more players participating. It's like the white goods sector. The demand continues, but there are more players coming into the market. Similarly, over here, Muthoot and Manappuram, which were two main players, so correlating maybe 80, 85%, 90% of the organized market, I think their percentage share possibly has to come down when the market is recognized. At the levels at which the stocks are, I have got no complaints with them, in the sense I would say that if somebody wants to buy, I'm not going to stop him from buying it, but we have to accept the fact that it's not ever going to be as good as what it was, say, 4 to 5 years ago for these two companies. Point number two is, as far as gold goes, yes, the gold prices have shot up. But allow me to state that if somebody had bought a gold piece just 3 years ago, I think his appreciation would have been over 20, 25, 30% right now. So I think instead of looking out for a proxy over here from the gold price angle, I'm saying go and buy gold piece. That's the way I would look at it. Coming to Muthoot, I think it's between the two, Muthoot is definitely a better company. But Manappuram, over the last couple of months, there have been reports that the non-gold financing business also is possibly finding its feet properly. So there are reasons why the stock prices are refusing to fall further. There are reasons why the stock prices are showing signs of going up. But honestly, I am in no hurry to possibly recommend both of them, despite stating that Muthoot from a balance sheet angle looks to be a very, very solid company.
Okay, that's the view coming in over there. Let's address another story. The NSE semi-annual index review and the nifty CPSE ETF adjustments are due tomorrow, 29th of March. Vivek is here. He's back with us with a roundup of all the possible changes. Vivek?
Well, that's right. So, tomorrow, two important developments, especially from the passive indices or the passive ETFs point of view. First, we have all of the NSE indices, so the Nifty Bank and Nifty IT indices. No changes as far as constituents are concerned, but minor weight changes would be seen there. However, when you're talking about the Nifty Next 50 index, there are 5 inclusions and, correspondingly 5 exclusions, and there are significant, fund flows that you will see into these particular names. So first on our list, when you're talking about the Nifty Next 50 index, ABB India, Adani Wilmar, Canara Bank, Page Industries and Varun Beverages, all of them make their inclusion into the Nifty Next 50 index. And especially when you're talking about some of the key inflows that will be seen, Page Industries almost $35 million expected tomorrow, Canara Bank around $31 million. On the other hand, the exclusions are Emphasis, Bandhan Bank, Biocon, Gland, Paytm. Some of these stocks have taken a knock in today's trading session on the back of the expected outflow tomorrow. Emphasis expected to see almost $23 million worth of selling, and Bandhan Bank around $26 million of selling. On the other hand, when you're talking about the CPSE ETF, again, a weight readjustment here. So all of the PSU stocks, especially Coal India, Bharat Electronics and NHPC, these are the stocks that will see minor inflows between the range of $5 to $22 million. On the other hand, outflows will be seen in ONGC, NTPC and Power Grid between $16 to $18 million.
Okay, thank you very much for that. Maribun, that's a bunch of changes that are going to take place possibly from tomorrow. That's the expectation there. But wanted to get your thoughts in on Hero MotoCorp. That's a big drag in trade today. There are the usual concerns about, demand waning off, rural slowdown, the possibility of El Nino, deficient rainfall, which will further hit the rural demand, but also competitive intensity rising with Honda getting aggressive in the motorbike space with that 100cc launch. Thoughts on Hero MotoCorp?
I think you said it all. I think at the present moment, I think the monsoon factor also is possibly assuming more and more importance. More and more reports are coming out that we may not have a good monsoon this year, and that definitely Hero Moto has been a good proxy as far as rural spend goes over the years. Something somewhere has gone wrong with this company, I would say. The only thing in defense of this company right now, the stock right now, is the valuations. I think no complaints over there. Not expensive at all. But should one buy into it, honestly, in this market scenario where people have virtually lost complete interest, complete appetite to buy anything, why go and buy into a Hero Moto? That's a simple answer. And I think you have spelled it out correctly. All the various reasons which you gave, including intense competition, including market share, including monsoon, I think all holds true. The only point, as I mentioned earlier, is stock price at the present level. There may not be too much of downside, but that is no reason why somebody should go and buy into it. So I would give it a clear pass.
That's the Kotak note on Hero. By the way, we'll get the numbers for month of March when we come back next week. I mean, I think over the weekend, next Monday, we'll have the numbers. Monthly sales numbers for Hero have been tracking just under 4 lakh or so. The buzz this time is that it'll be March will see a pretty strong number, significantly stronger number. So we'll see. I mean, for today, the stock is down about 2.5% or so, 22.50 or so on Hero. We'll take a quick break here. We are back. Ajay Vora of Novama Asset Management will be with us on the other side. Meribon stays with us as well. Stay with us.
Welcome back. Apollo Hospitals, by the way, has moved to the high point of the day. So that's got a gain of close to about 0.5%. Pull up Sun Pharma. Sun Pharma is also nudging higher. It's up close to about 0.3%, almost back at the high point of the day there as well. A couple of these, mid-cap financial names. Ujjivan Small Finance Bank has spiked up. Equitas Small Finance Bank, Bank of India is a gain of close to about 1.5%. So watch out for this pocket too. Gas prices is the other space that we're tracking. They're expected to be revised from the 1st of April. Sonal is here with the details. Sonal.
Yes, they are expected to be revised from 1st of April, but this time around there could be a change because there's a possibility that the government would go ahead and adopt the Kirit Parikh recommendations this time for gas pricing. The cabinet, as per reports, is expected to meet on Wednesday, and that's when this decision is sought to be taken as well. Now, how is it different from the normal formula-based pricing where average of the global gas prices is considered? Well, this time around, there is a cap and a floor to gas prices according to Kirit Parikh recommendations. So the floor here is considered at $4 per MMBTU, the cap at $6.50 per MMBTU, which will gradually be raised by $0.5 per MMBTU every year. Kirit Parikh recommendation also spoke about complete liberalization of APM gas, that is formula-based gas pricing, from 1st of Jan, and difficult fields should see liberalization by 1st Jan 2026. This is all for the older fields. The new fields, they will continue to enjoy pricing freedom as they do right now. Now, we did speak to a lot of gas users earlier this week as well, because they, of course, will be benefited if there is a cap on gas prices, and gas producers, they will be impacted because there will be lower gas price that they will be getting. MGL told us that they expect Kirit Parikh recommendations to be considered on 1st April itself and a final outcome back then itself. IGL said if Kirit Parikh recommendations are taken into consideration, gas prices for them could fall by $1 per MMBTU. And both of them said any decision with respect to hiking or cutting prices is only dependent on what the decision is like on 1st of April. So if we shift from the formula-based pricing, it would be a big shift in the gas pricing regime, and that is something which is key to watch as far as the gas sector is concerned.
Okay, all right, Sonal, thanks very much for giving us a heads up on that. That obviously is going to be the big story come the 1st of April. Meribon, while we await clarity on the actual, fine points that will be implemented as per this Kirit Parikh report, What is your view, and what part of the gas train, if you like anything here, what part of it would you look at? A player like GAIL, or would you look at consumers like IGL and MGL? GAIL, of course, had the advantage of that tariff hike earlier as well that we heard of just about last week.
I would not opt for GAIL, but I would prefer MGL to IGL. I think between the two, I think. But allow me to state, Surabhi, I think what we are seeing in the market, I think, and I think you mentioned and even Prashant mentioned earlier in the show, that what we are seeing right now is the flood which we are seeing is happening in the side market. And one influencing factor which many people are ignoring is basically the way people are just dumping shares ahead of the year end. And there is a tremendous impact cost. There are a whole lot of solid mid caps which I think are available at much lower levels than what it would have been if the Nifty was at 15,000 right now. And I think that is where possibly cash will be king and cash could be utilized well. So coming back to your MGL and IGL, I think between the two I prefer MGL. I would not go with GAIL. I think Kirit Parekh recommendation report basically is something which is in the, I have been hearing about it for the last few days. And if something gets announced over the next 3 or 4 days, I think as a consumer, I think MGL could possibly be a better play among the three.
Okay, all right. Thanks a lot, Merbon, for stopping by and giving us your view on a whole host of stocks that we did discuss. Well, talking about stocks, though, a couple of brokerage notes have come about. And the biggest gainer on the Nifty today is IndusInd Bank. It's higher. And it was part of Nimesh's standard brokerage report. Nimesh, Boffa Securities, they believe there's good upside out here. And the stock is reacting very, very positively.
And good, good means they're expecting a 50% potential upside on the stock. A target price of 1,500. They have a buy rating as well, and it's a preferred pick as well for BOFA within the mid-cap financial space. Now, the key reason is they believe that IndusInd Bank is no more a potential turnaround story. It's already been done, and from here on, the executions will be seen, and that will be apparently visible in the results as well, and that can come as soon as the next quarter. So that's the key reason they are bullish on. Even from a valuation point of view, current valuations, they believe that the bar for execution is much low, and hence the margin of safety is going to be quite high at these current valuations. Now, BOFA is looking at 4 big triggers for IndusInd Bank going forward. The first being there is going to be a macro plus rate cycle is something which will finally is now getting finally aligned with what IndusInd Bank's key business metrics are. So that's going to benefit as far as the earnings are concerned. They believe that the liability plus asset quality both are much improved compared to the peers. And 3, the core profitability is still best in terms of the peers, in terms of the industry, despite the de-risking. So that's the key, 3-4 key triggers. Now, when you talk about valuations at 1.2 times price to book, the stock is pricing just 13% growth and 15% ROE versus BOFA believes that 15% is something which is going to be even under stress scenario. So, street, if you look at the brokerage reports, others as well, everybody on the street is expecting around 18-19% of ROE for IndusInd Bank. So, given the kind of valuations that's trading right now, the fact that the CEO extension has come in, the fact that earnings are going to be strong, BOFA believes that this is a good story to track, and it's a potential of a 50% upside. And the fact that most of the turnaround seems to be over, now it's all about execution and seeing the numbers, and that they believe can come. And that's the reason why there is a big upgrade from, not an upgrade so to speak, but BOFA is very bullish on IndusInd Bank within the financial space.
So they believe it's not now a question of will turnaround, they believe it's turned around.
It's already done.
And
now
things
it's all
will
about,
look up from here on.
Exactly.
All right. Well, no wonder that stock is reacting in today's trading session, up and about in today's trading session. For the time being, though, we'll slip into a short break. On the other side, no. All right. I think before we slip into that break, I thought we'll go to Nimesh's chat in terms of D-Street Chatter. But before that, let's get chatting with our Alpha Manager of the day. Ajay Vora of Nuvuma Asset Management is joining us on the show. Hi, Ajay. Thanks so much for joining in. Ajay, plenty of pessimism, but sometimes these sort of scenarios throw up the best opportunities. What are you all doing as of now in terms of money allocation? And do you believe post this 10% correction on the headline index, that's the Nifty, but the broader markets have corrected far more? Time to allocate more money?
Yeah, so thanks, Nigel, for having me on the show. So honestly, at this point of time, tactically, we have increased our long exposure in the market. And there are a couple of reasons to that. So one is actually, if you look at it, we are in a similar phase to what we were in June 22, which is last year. At that point of time, in a quarter's time, market was down almost 10%. and short positions were also quite significant. And if you look at the current period over last 4 months, which is from December till March right now, markets are again down almost 10%, but the short position has been almost 2x of what it was at that point of time. Adding to that, if you look at India's performance within emerging market, we have given away large part of the outperformance. So if you look at over last 6 months, MSCI EM is flat, whereas India is down almost 6%, and in fact MSCI World is positive 4%. So to a very large extent, there has been a massive shorts in the system, as well as our underperformance is also pretty significant. So I'm not saying that we are completely out of the woods, but tactically I think we are set for a maybe a decent bounce post the year end, post this whole 31st March liquidation which is going on. We can see some sort of bounce in the first week or so.
So new financial year will bring new tidings. That's what Ajay is telling us. Hopefully. Ajay, good afternoon. Which areas to get in to position yourself for that bounce, or what's looking good? Because in the broader market, so much has seen so many sectors, so many stocks have seen so much damage. So I mean, the field is open, but one has to be careful.
So honestly, Prashant, it's not that the worst is completely behind us, because I think as we discussed last time, we have to live through this narrative of slowing growth, and it actually is transpiring from the global markets. So actually, I strongly feel that the damage is already done by the Fed in terms of aggressive rate hikes, and now we are seeing the implications in the financial market, and gradually it will translate into the real economy as well. So the way it will happen is that more and more regional banks and large banks in US will slow down their disbursement growth. The overall growth itself will start coming down, and inflation will also eventually start coming off. And that is very much visible in the 10-year US Treasury, which has actually corrected quite a lot. So at some point of time, the Fed will pivot and change their stance. But I think till then, we will have to live in this narrative of slowing growth. Within that, we continue to maintain a positive stance on the banking sector. And personally, I think that, post all this crisis, once it settles down, there will be a renewed, I would say, appreciation or an acknowledgement of Indian banking system, and more so the central bank, which has done a commendable job over last couple of years. I think that, the banking sector's growth, although it may come off by, a couple of percentage points, but whole fears of, NIM compression and asset quality issues are overblown. Valuations have come down pretty reasonably. So we continue to maintain a positive stance on banks. In addition, we are also pretty positive on the pharmaceutical sector, because I feel that, with this whole whatever slowdown is happening in US, IT may no longer continue to be a defensive sector, and therefore the growth rates have actually collapsed so far. If you compare it with the pharmaceutical sector, the valuations look pretty reasonable for more or less similar growth. So my sense is that monies should move from IT to pharma as a defensive play, and we continue to maintain positive on banks.
Okay, so positive on banks, positive on pharma. Ajay, hi, good afternoon. Let me ask you about the only area from where we at least get, positive news. And that is a lot of the ordering activity, whether it is defense or it's railways or it is, NHAI. And we see those companies pop every now and then when they announce orders. How are you playing this particular part of the market? Because, stock prices have also moved up quite a bit. So how do you find valuations here? And it's a large amorphous space. I mean, there's defense, there's EPC, you could look at power, you could look at railway, related stocks. So which part of this CapEx story are you most convinced about?
Sure. So, we always have seen in India that, a particular theme which gets really, attractive, and people start looking at a lot of action, they extrapolate that, and immediately, the stocks become pretty expensive. So in this whole correction, during this whole correction, cap goods infra is one space which has not corrected, or I would say relatively less corrected versus all other sectors. Within this, we are pretty positive on the whole railway capex side, because eventually, if you look at it, 5 years back, the central government expenditure used to be somewhere around 40,000 crore. That number is now north of 2 trillion rupees. And we are actually seeing a lot of traction across public and private companies where they are getting very large orders. They are setting up capacities to actually meet that requirement. So railway capex is one where we are very positive. And another is the whole, the capex cycle, the private capex cycle. But that actually, if you look at the numbers recently, that has slowed down a bit, considering the global uncertainty and also the domestic, slowdown, what we are seeing on the discretionary side. So that space is seeing some sort of slowdown. But yeah, on the overall, we are positive on the railway capex side.
Ajay, what about the auto space? Now, autos have gone through a very long period of underperformance. Over the last 5 years, I think the Nifty Auto Index has given a CAGR of less than 5% in, low single digits kind of return. And it's majorly underperformed the benchmark indices. And the hope was that, with that pent-up demand, EV push, autos will actually start improving and it's a start of a structural upcycle. But now increasingly people are concerned about this rural slowdown, high cost of ownership, and we are seeing some downgrades coming through. Where do you stand on autos now?
So honestly, Rima, we are not very positive on the auto, and auto has always been a very stock-specific sector. But barring a couple of very bottoms-up ideas, as a whole, we are not very positive. I strongly feel that whatever price hike the sector has seen over the last 2 years, and during the same period we have seen a very high inflation as well. To some extent, and also the whole disruption through the EV, although it has not picked up in a very big way. But my sense is that, rural market, which is the key driver for this whole sector, is yet to see some sort of revival. And till that time, I don't think, we are likely to see this sector doing well. On top of it, there are a couple of players who have significant export exposure as well, which again has taken a huge knock. So, put together the rural slowdown, the export markets not doing well, and the price hike which has taken place over the last 2-3 years, has made the sector a little bit, on the heavier side. Valuations are still not very cheap, except for the, a couple of two-wheelers which you discussed a few minutes back. But broadly, if you look at it, valuations are still not very cheap.
All right. Ajay, we'll leave it there for today. Thank you very much for your time. It's always a pleasure having you with us here on the program. Thanks indeed. We'll take a break as well, and as always, D-Street Chatter comes up next. What are dealing rooms talking about? Nimesh gets us that intel on the other side. What to buy or sell today for a reverse trade tomorrow with our technical experts. And of course, our next guest is Jay Bala, and all things technical with Jay when we come back. Stay with us.
Welcome back. You're with us here on Closing Bell, and we are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, we're playing out, the Financial Services Index. That's the Nifty Financial Services Index. And it appears the Nifty Bank has suddenly taken an up move. Just pull up the intraday chart out there. We've been seeing this periodically all through the trading session. But I think, since we have that expiry that's playing out, maybe we pull up that index. The Nifty Bank as well as up close to around 150 points as we speak. The Nifty Bank, I think we should get that one up for you on the screen. Well, Nimesh is with us as promised in our special segment, D-Street Chatter. Nimesh, what do you say? Lack of appetite, it appears, out there. Breadth of the market is absolutely tarnished. We are tracking the headline indices. But tell us, what is the feedback you're getting?
So, we've been saying this for the last couple of days, right, Nigel? The sentiment is very weak. Traders are not making money. Even investors have lost a lot of money. So, maybe towards the year end, everybody's trying to just close on their positions and just sit little light, and then maybe they'll take a fresh call in the new year. So, that's technically is playing out in the mid-cap and small-cap for the last many days. I guess today and tomorrow could be the last day because of the T+1 settlement now. So, maybe that pain in the mid-cap and small-cap could be for the next one or 2 days maximum. That's the overall feedback. In terms of flows, again, a mixed day of trade. You just pointed out about the Bank Nifty. While there is a F&O factor playing out, but also after many days, there is an indication of some, at least bids been shown by larger FIs in the financial names. Across large-cap banks, there are some bit of interest is back. Whether they're buying or not, but at least there was an interest of buying or some bids have been shown. So That's the feedback as far as Bank Nifty is concerned. I guess, as we spoke, right, the bigger pain is in the mid-cap and small-cap. The mid-cap index, again, in today's trade is down 0.5%. And there are so many stocks which are down 40, 50, 60, 70%. So there's been a clear hit in the portfolio as well for many investors, and who are especially in the mid-cap and small-cap. So that pain seems to be there, and that's hurting the sentiment as well. Technically, again, we've been repeating for the last many days now, 16,800 is a very important level to watch on the downside. So that at least is showing some bit of support for the last many days. But I guess sentiment is weak for sure. Next 2 days will be very crucial for the mid-cap and small-cap. But first signs of some bit of bids being offered in the financial names. That's the overall feedback in terms of flows.
Well, that's good news then, Nimesh. But what about individual stocks? You alerted us that MapMy India, there could be a large trade. I think some part of that got executed.
Yes, so that's the first stock as well in my list. C Infosystems, a large block got executed, 8 lakh shares, close to 1.5% equity changing hands. I had alerted this in yesterday's deal sheet chatter as well. And in terms of seller, I believe one of the foreign entity who owns little 6% stake was a likely seller in today's block. And in terms of buyers, maybe one of the large HNIs was one of the buyers as well, is what I understand. So that disclosures could be important as far as C Infosystem is concerned. So that's the first one. The second stock is Bandhan Bank. Within the financial names, this is one stock hit a new 52-week low and still under pressure, big volumes as well. I guess there are two factors. One, there is a big supply overhang on that particular stock, and the fact that this stock is getting deleted from the Nifty Next 50 index, and that's the reason why there is massive selling pressure from the larger FIs in today's trade in Bandhan Bank, and that's the reason why that stock is down. The third stock is Tech Mahindra. This is interesting. Within the IT names, been a big underperformer in today's trade, down 3% last when I checked, and even the volumes are on the higher side. And again, there's a note from Citi today. They have a neutral rating, but they've opened a 90-day negative catalyst watch on Tech Mahindra, largely because they believe that the growth challenges still persist, and Q4 could be soft for Tech Mahindra, and hence that stock is under pressure today. And the last stock is Supriya Life. Again, this stock has hit a new 52-week low. Even in today's trade, the stock is down 2%. But I believe at these levels, some bit of HNI activity is back. So at least the feedback is some large HNIs have looked to enter into this stock at these levels. So there is some bit of accumulation happening. But again, all the pharma stocks have been massively hit, and this stock is down at a 52-week low. So some bit of buying support from HNIs is what I hear in Supriya Life today.
Thank you very much for that. There are many mid-caps hitting fresh 52-week lows, not just Supriya Life or Bandhan Bank, which Nimesh spoke about, but you've got Tata Power, IEX, Easy Trip, Indiabulls Real Estate, Dilip Bilkon, a stock that you spoke about earlier in the session is now dipped into the red. Dilip Bilkon has a cut of nearly 1%. So despite the order wins, the stock is struggling. Mitesh Thakkar is back with us. Mitesh, any fresh ideas for BTST or STBT?
I actually have one of each. Sun Pharma, has been volatile. There has been some news flows, but the stock price has slowly started gaining strength. So BTST here with the stop at about 977 for targets of 995. And SBI Life is turning weak after a bounce back in the last few sessions. So that's STBT with the stop just about 1100 for targets of around 1070.
Okay, so one buy and one sell. Thanks, Mitesh, for giving us those ideas as we're getting into the final leg of trade today. Well, let's bring in Jay Bala into the conversation. He's joining in. Of course, he's from cashthechaos.com. Jay, it's getting to be a pretty tiring market because the price action is in such a narrow range. You tell us, are you retaining your negative view?
Thanks for having me on the show. So the market might be looking like it's consolidating and holding support between 16,800 and 17,200. But under the hood, the markets are deteriorating pretty solidly. Now, if you look at the number of stocks that are near the 52-week highs or 52-week lows, there are about 400 stocks. Of them, only 11 are at about their 52-week high. Rest of them are near their 52-week lows. So, that's a breadth deterioration. And, the leaders of these markets were FMCG, autos, and IT to a bit. And auto has clocked a double top and it's breaking down. And, key stocks and key sectors are breaking down. Only the FMCG sector has still not broken down. Almost every other sectoral indices have actually broken down. So the quality and the breadth of this market is getting poorer. And then if you look at the Nifty mid-cap and the Nifty small-cap, they are pulling away from the 52-week lows, while the Nifty and the Bank Nifty aren't doing that yet.
Jay, I thought you will start, or rather, I thought Surabhi will start with Deutsche Bank. You gave us the scare last time you were on the program. The stock did wobble. It really wobbled on Friday. And then everyone went into the weekend in a very tentative mode, but nothing happened. I mean, Monday was calm. Still hold those views, Jay? Because you're tracking global markets pretty closely as well.
Yeah, that's right, Prashant. In fact, if you look at the Dow Jones Stocks Europe Bank Index, the potential for the European banking index to drop about 30% is pretty high. I put out a chart on my handle. People can have a look at it if they want. But the structure is such that this is going to continue to show pain into the month of April. So if the index can drop 30%, I'm sure the components of that are going to crack pretty much. So maybe we may not have a recurrence of Credit Suisse, but we could have something pretty close to it.
Okay, let's get back to the Indian markets. You said autos have made a double top and are headed lower. Could you elaborate a bit more? How much lower do you think the auto names are going, and which ones in particular?
Yeah, see, if you look at Eicher Motors or Maruti, it's clocking a 5-year negative return. And if you come to specific names or the index as such, the least the index is likely to go is below the October low. For me, the medium-term move from the pandemic low is not a start of a fresh uptrend. But if it's a fresh trend, then this market, the auto sector is likely to pull very sharply lower. So, the March, first October 2022 low, that's the objective. Then it would probably, if it breaks below that, probably looking at the March lows. But specifically, I'm slightly negative on Bajaj from current levels. I think it will hold below 3950, and it'll break the March lows somewhere below 3500, 3400. So that's the leading stock for me within the sector. And even Mahindra & Mahindra had pointed out, that was a leader in the market that cracked below 1200, and it's remaining weak. You could see a short-term bump up, but at the short to medium-term trend remains down for the market leader Mahindra & Mahindra.
Okay, all right. Hi, Jay. Jay, what about this call on the dollar index? It was cooling off, but you're saying that it could head higher from here. Where is it headed? And I think you have another stock call as well. Pidilite. Go ahead.
Yeah, see, dollar index, in the extreme short term, it shouldn't have come below 102.5, but it has come down. There are two possibilities. Both of them point to, a much stronger dollar index from current levels. The only difference is it going to clock, a new low below the February low of 100.8, or is it going to go directly? That's the only difference. In either case, we're going to see a counter trend rally or a start of a new strength, at least towards 109, 110. That's the call on the dollar index. When it comes to the other stock in the Indian market, Pidilite, it's got extreme short-term negatives, not too much of downside. It's a very strong downtrending stock. But, if you look at the short-term levels, I don't think 2400 is going to go, but it's going to drop somewhere close to 2200 to 2100. So that's not a great, trade for positional traders, but definitely an interesting trade for extreme short-term traders.
Jay, you've of course maintained a bearish view for a while, and people will argue some of the targets obviously are fairly dramatic and quite scary as well. But let me ask you this. There's also a view that says, despite everything, all this talk of central banks, dollar, interest rates, banks blowing up, the mother market hasn't cracked. Dow's down through all of this just 2%. S&P is actually up 4%. Even the Russell 2000, it's flat. Nasdaq is up 10-12%. So the equity market in the US is not cracking. What do those charts tell you?
Yeah, that's right. If we look at the markets from a surface level, it does look like that. But if you, as a technician, barring the Nasdaq, every index has broken down below critical support. But it's not just seeing acceleration. Once the S&P futures is trading below 3900, 3868, we're likely to see in a visible fashion what I'm talking about. And it's going to see further acceleration. From a medium-term perspective, I'm expecting the S&P to drop somewhere close to below 3,200 to 2,900. That's the range I'm anticipating. So, I would think the market should hit those levels somewhere around June to, say, August. That's the sort of time frame I'm working with.
Got it. Very quickly, you've got some stock ideas, Bajaj Auto and Pidilite.
Yeah, Bajaj Auto, as I said, it's probably going to be the leader within the space, and the March lows that I spoke about for the auto sector, that's the price objective for Bajaj Auto, as long as it stays below 39.50, and same thing for Pidilite, as long as it stays below 2400. I think it's heading somewhere close to 2150 to 2200. 2400 is the risk level for Pidilite.
Got that. Thank you very much for joining in. Need to slip into a very short break. We'll come back with the closing rates.
Okay, there's 3 minutes to go for market closing, and it's very, very quiet. 24 points. I mean, it's actually exactly a repeat of what we saw yesterday, except the fact that unlike yesterday, when we had at least some semblance of a rally mid-afternoon, that did not materialize. The market just is drifting sideways to close flattish. 16,960 is where we are going to close around at. Just a few things to note. The entire Adani Group stocks, I think, needs mentioning because anything between 5 and 7% is the losses. Adani Ports, Enterprises, Adani Total Gas, Adani Green, Adani Wilmar all saw big knocks today. Apart from the Adani Group stocks on the Nifty, Tech Mahindra saw a large knock. Tata Motors was down sharply. Hero MotoCorp was down. ONGC and Bharti were the other names which were down and out. I mean, actually, the only notable gainer was Indocent, as we were discussing with Nimesh earlier. UPL was up a little bit as well. That's large caps for you. Rima.
Well, look at the way the Nifty Bank moved up, especially in the last 1 hour of trade. The Nifty Bank ends with a gain of 200 points. That's a half a percentage point rally. From the day's low, the Nifty Bank has recovered close to about 300 points and a big spike seen in the last 1 hour on that. And it's not just Indocent Bank. HDFC Bank, 1% higher. ICICI Bank moved up close to about 0.8%. HDFC Limited also up and about in trade. Reliance Industries continues to see some buying this week. It's seen a gain of close to about 2%. A couple of the other movers include UPL, where our colleague Sudarshan was telling us that how the promoter holding in UPL stands at the highest level that we've seen in the last 18 years. Plus the bullish note from Nuvama, where they're saying valuations compared to their historical averages are at a discount right now. So they sounded upbeat on UPL. Dr. Reddy's inched up higher. On the losing side, Hero MotoCorp, Bharti Airtel, Tata Motors, ONGC. Generally, most of the auto names were on the back foot.
Okay, and most of the mid-caps were on the back foot as well. Look at a stock like Dilip Buildcon, which starts the day with positive news and is ending almost 2-3% in negative territory. It's not the only one. Nykaa is ending with a cut of about 4%. Granules down 4.5%. Something like an IRCTC down 3.5%. There's IRB Infra. It's a long list of losers. Kalyan Jewellers, of course, where the block trade happened with the Warburg selling a part of its stake. 9% down on that stock. Morpin Laboratories. Yesterday, remember we were talking about some positive news flow coming in and helping the stock. Today, well, 7% slam dunk straight away. That's been the extent of the sell-off. Bandhan Bank down 5.5%. And all of these falling on pretty decent volumes as well. Of course, the Adani Group of stocks was under pressure more throughout the session. Adani Enterprises, Ports, Power, most of those stocks down anywhere between 3 to 5%, depending on which one you're looking at. On the upside, some names can be sort of spotted. PNC Infra, they also got an order win today, 6.5% up on that stock. Mannapuram had some buying come through. Imami had a decent day, and so did Indian Hotels, up about 3.5%. But otherwise, the mid-cap market really feeling the pressure all through the last couple of days.
And that brings us to a close of a very listless session on closing bell and the equity markets. But tomorrow, remember, we've got the March series expiry, so that could add to its volatility and some activity. A wrap on the show. Thank you for watching.